I am not a financial advisor. Everything I'm about to talk to you today about is just my own thoughts, my own advice. You should do your own due diligence, and please just take this information as entertainment only.
Yeah. Coincidence. Yeah. Coincidence. Yeah. Coincidence. Something that happens by chance, I think not.
What's the crack, everyone? Welcome back to Buy Wholesale. I hope you are all well. In today's video, obviously the markets have done a bit of a double dip again. Things are going down, and a wee bit more down. It's important in these times to remember what your stock game is about, why you invested in the stocks, keep believing in your stocks, look at your support levels, look at your resistance levels, check out the graphs, get a full understanding of when is the best time to buy the dips. Try your best to hold your nerve and buy those dips. I've had people messaging me on the Instagram and different things, sort of saying, "Oh, what to do? I'm panicking. Things are going down." And I share that fear with you guys. It's not nice seeing things go down, but you've just got to believe in the stocks that you've got. I've actually done a lot of selling and a lot of buying recently. Mostly just buying better quality stocks. It's all good crack. Maybe having a wee punt on a penny stock, or Nick's investing in something that you believe maybe in a couple of years' time is really going to take off, but those types of things, I've started rejigging. If I'm up on things, I've been pulling out. Anybody that follows me on Instagram will have seen that I've sold up 90% of my Zomedica. After being up over 135% of that, I cashed out, I've reduced my holdings, and I've just been taking the profits away as it's been coming down. Main reason being is not that I don't believe in Zomedica. Ideally, I would love to get into Zomedica again. My target today, for example, if it goes down to 1.4, which it was currently at there sort of 2-3 days ago, I'm going to fill up and get my position big on that again, because I believe that's at a good level to be able to ride back up. I'm trying to balance my portfolio to allow me to get better stocks, i.e. Tesla. Now, Tesla, unfortunately, has some bad news about their semiconductors, and that's a global shortage issue. And I might do a video about Tesla. If that's something you want to see, let me know. This video today, anyway, is about those investors that are new to the game, that are starting to freak out. And I understand, that sentiment. For example, I started that £1,000 invest account two and a half weeks ago, and on the day and hour I pushed the button and put that £1,000 in, the markets just went straight down. So I get that, and anybody in that scenario that started their portfolio 2-3 weeks ago pretty much only know about markets going down, but I can assure you that doesn't always just happen. It does go back up and rebound, and you've just don't A and beat it. Don't just keep punting the money in it.
I've got nothing left. I've got nothing left.
You've got to find the right level, resistance level, and just try to ease it in. Even set yourself a plan up over a week, 2 weeks, 3 weeks, depending on how much money you've got. Just phase in, average in, keep bringing the price down, and it will be okay, guys. I promise you this. We could be seeing quite a significant change to the markets here for the foreseeable. Things might go sideways. It's a wee bit unknown yet, because there's a lot of talk about the yields and the treasury yields and all that jazz, and what all that means to the situation. Hopefully it becomes a wee bit more apparent when Biden gets involved, and hopefully that will, they'll start squashing those fears of inflation. For people that are feeling they want to be invested in the stock market but are concerned, there's always great options. As I've talked about in my previous videos, Hargreaves Lansdown offers some exceptional funds. So when everything's looking down and everything's going red, guys, I always look at my funds, and we'll bring these up now, and we'll talk about some of the funds that I have in Hargreaves Lansdown. Like I said, I have a small proportion of my portfolio. It's very, very little I put away in funds. The main reason being it's just a bit boring, and it's kind of like a safe haven in some respects. So I may as well bring up this here just to show people that, look, you can invest in things with substantial amount of money, and you will not see such panic days, 10-15% days of drops. Funds are a collective, a consortium of different stocks and shares, and the idea is that they kind of all balance out. And if you pick the right funds, there's ones that don't give you as many heart attacks, and even in this current climate will go up. Before we get into it today as well, I just want to direct everybody again to my writer's article. Please check the link in the bio, and you can read a bit more about that. Also get me on the Instagram, BHSDMV. We're growing that platform. You can see all my live trades. You can see an update on just my own personal life and get a bit of an insight into that. Why would you want to? I don't know, but if you do, get me on it. Twitter, guys, I've got the poll up. It's going to do a video based on whatever you decide next week, and I'm going to keep that that going on a weekly basis. Keep your comments coming to me. Ideally, if you can direct them underneath the comment section, just so it's easier and I don't have to decipher through all the comments. So comment section off the YouTube page, go to it, you'll see where I posted the link. Just start banging in some recommendations. I'll add them all to the poll next week, and we'll keep that going. A way of being able to interact and maybe get some sort of good videos towards my subscriber base. Please like, please subscribe. I'm trying to grow that subscriber base. It's going well, guys, but I need your help to keep it growing. Alright guys, so this is my H&L fund account. I've just went under the transaction side of things just to give you a bit of an insight to when I started. So I started this sort of around the 5th of May, guys. About 2.5 years ago, maybe slightly longer, I started buying shares through that work scheme. I talked about all this in the previous video. Long story short, bought in the capital shares, months went by or whatever, and then boom, the crash happened in March. I got my arse absolutely red raw, as most people will have. And in May, I just went, Jesus, why was I anywhere near Capita at that stage? I can do so much better with this money now, knowing what I know. So in May, I just decided, right, I'll just put whatever's left in the funds just to keep it in H&L account, because I'd already had my Trading 212 platform set up for a while. So that was it. Started buying in all different types, back and forth, different types of ones, exploring them, looking in the fees, and up until pretty much December, I've just been averaging in, buying a wee bit more, different types of ones, and then I was like, well, that one's not performing, and I'm selling. So I've got it to a point where I feel I've got a nice selection. So as you can see, I pumped in about 1,200 quid. That balance now is sitting at 1,365. It was at £1,400 over 2 weeks ago. So you think about all the poundings, and my portfolio top line has took a bigger gaping than 2.5%, and that's what that is. At 1,400 down to 1,365 is a 2.5% drop. It's a far easier way to digest that. As you can see, guys, I'm up every single one of them. The other thing that I like about the funds is I can get a bit of balance difference. I can get into sectors that I don't really have exposure to. So we'll just check out the Asian one, for example. You go in here, you can see that it's performed pretty damn well over the last load of years. From my own research, obviously Asia seems to be a massive player. It's going to be a massive player going forward. So I wanted exposure to that. So if you scroll down, guys, you'll see the ongoing charge, 1.13, and there's a saving then from Hargreaves Lansdown being their members. So the charge is just shy of 1%. You can see here, historic yield, income paid annually, it's a dividend, ex-dividend date is the 1st of August, you have top 10 holdings. So a bit of a mixture of different things, 10-cent holdings, Taiwan semiconductor manufacturing, good big play. You can see why they're throbbing, guys, because there's a semiconductor shortage, as we talked about. Samsung, all these AIA, Bank Asia, the top 10 sectors. Obviously, I'm loading up on the software and computer services, the future, technology. They've got a good bit of exposure to banks. And then all these other things that I just don't bother, because they don't really excite me. But I obviously know that it's important to have these on your portfolio, so they're great. Top 10 countries, nice mixture, man, all around the Asian sort of Pacific areas. Ticks those boxes, don't really look into too much. Check the outgoing fees. Yes, I compared it to different ones, of course. That sounded good to me. Pumped the money in and I haven't regretted it since. Okay, so the Bailey Clifford one then, guys, you can see here again, start of September, bought a bit more in December, bought a bit more in February. It's been proven to be a good one. Obviously, if we look at the chart, it has taken a bit of a pounding the last week. It has dropped, but that's okay. Let's have a look into it. Fee 0.53. I mean, you don't see the fee. The fees don't put me off. Just look at the annual return, not the previous performance, guys, gives us any indicator, but you can see it's going up and up, and obviously we've had one hell of a year in this sector. Again, you got your dividend, yield 1.2, and that's going to come in around Christmas time. Happy days. Again, we've got the semiconductor, which is massive. ASML, again, chip, massive. Alumni, massive. Teladoc, which I'm bullish on as well. I've got that exposure there. And there's so many more. I mean, again, you need to look into the whole list, but these are the main sectors. And yes, I do heavily invest in the United States. So people will be asking, well, you're not doubling up on different ones. Well, yes, I am, but I don't have massive pharmaceutical plays, especially medical stuff. I don't. Healthcare, automobiles and parts, yes, okay, I'm loaded up in Tesla and stuff, but these other sectors I don't really have. So I made sure that I wasn't just doubling up on stocks that I have. I was trying to get a bit of diversity. Another one, Bailey Clifford managed, another cracking one that I found. Previous historic values show that it's been always positive. At the end of the day, the worst case was 2018 and 19, 4.87%. Current bank rates 0.6 at best you'd probably get. Maybe my daughter's ISA, we had it at 3% and they reduced it to 1%. I've taken all her money out and moved it in the funds. Don't see the point in having it there. So you're beating banks, even in worst case scenario. Obviously it could go red, don't get me wrong, but chances are, guys, you just have to roll on the side of caution here. 5 years worth of growth, and the worst case, you're still 5xing anything you would be getting in the bank. So biannually, so twice a year, we're going to get a nice wee dividend. We look at the top 10 holdings. Amazon, which I have my own stock in, but it's only 1.48% of the portfolio. Shopify, Treasury, Zalando, Wayfair. Obviously, there's even exposure again to Tesla, the Treasury, top 10 sectors. Okay, so bonds. I don't have anything to do with bonds. Nothing excites me about bonds. So I, again, know the principle of diversity. I load up on 18% of this fund is to do with bonds, so I've got that exposure. Again, okay, software, computer services, I'm quite heavily involved in that in my own stocks, but cash equivalent, retailers, investment banking, broker services, medical equipment services, media, industrial support, banks. I don't have really any exposure to that in terms of stocks, so load up on it. Legal and general European index, guys, nothing too exciting. Not going to have the big growths like I've shown there. But so Nestle, Roche, ASML, Louis Vuitton, Close, Siemens, don't have any of this, guys. Pharmaceuticals, again, you'll see banks, food producers, personal goods, non-life insurance, all sectors that I don't really have, don't really want, don't really excite me. But again, guys, important to get the diversity. The legal and general US index, okay, guys, so got us here again. Jesus, we can see the fee, annual returns, solid, nice dividend biannually, happy days. That'll come in June. I need that. This is a bit of a double up, okay? So I did have Apple, sold my Apple position. I did have Microsoft, I sold that position. I do still have Amazon. I sold my Facebook position, as I talked about in my previous videos when I played the FANG earnings. I got rid of Apple and Facebook, and I touched lightly on the fact the reason that I did that is because I've got this extra exposure. Tesla, okay. Google, I've sold all my Google positions. Johnson & Johnson, I don't think I've ever had that. Visa, did have that, but again, I've sold that. So we go on the Rathborn Globe opportunities then. Small enough fee, scroll down. You're still getting your dividend biannually, okay, albeit it's small. Again, Amazon, PayPal, Nvidia, Adobe, big players here, guys. Ring Central, they're massive as well now with your alarm systems. Top 10 sectors, okay. Retailers, so sort of 18% is exposure in the sector that most of my portfolio is. And it's okay to still invest in funds that, yes, maybe most of your portfolio is about, because it's still a throbbing sector. It's still smart. United States gives me that diversity. I don't have too many European plays or anywhere around the rest of the world, so I've got that exposure. So it just helps balance it. So much more out there, and there's so much more in this. I mean, look at this, guys. That's only totaling up to maybe 20-25%. And that's the top 10, so there's so much more into this, guys. And then the last one, so Roden Asian Alpha Plus, guys. Scroll down again, but pretty much what I talked about. I don't have exposure to the Asian market. Scroll down, decent enough dividend paid annually, coming in soon, need that. And Taiwan Semiconductor, again, guys, on the finger on the pulse. Semiconductors, we've been talking about that for months, about it being shortage, so load up on the semiconductor stuff. Tencent, Samsung, Alibaba, huge exposure to the countries that I don't normally have, and there's all this other stuff that build it all up as well. That's it, guys. That's the funds. By all means, have a good look. There's so many, over 3,000 funds, and the fund manager, I talked about in the previous video, it is good. You can go in and type the type of stuff that you want to look into. The wealth shortlist is as good as anything to look into. Whatever happens today, it'll be over. You can take 2 days to digest it all, refresh, and if you are nervous and you think, no, I don't want the certainty of investing in any particular stock, I can't take these big drops or whatever, guys, but you still want to be invested, why not start averaging in some of these funds that I have talked about, or other funds? And that's the good thing, guys. You've got the weekend, and if you still want to have a look, go on, research, check out all the different components of all the different funds. The reason, compare the different fees, compare what the holdings are. I'm in this in the long term. You all should be in this in the long term as well. Don't be fearful. Really don't be fearful. It will be all right. It will all work itself out in time. You should all be long-term investing, in my opinion. Anyway, but that's only my opinion. It's not stock advice. You must do your own due diligence, of course. If you'd like what I said, guys, that's the video. Please like, please subscribe. And until next time, enjoy your weekend, and we'll speak now.
Yeah, coincidence. Something that happens by chance, I think not.